This is the weekly video recap from Chris, brought to you by Admiral Markets. Today's vision is the US dollar. Is it the bear trend? Is the bullish momentum? That's the main question. Euro dollar, pound dollar, dollar yen, and AUDUSD, as usual, in our focus. First of all, though, be aware that this video is intended for a global audience, but may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out more information about that, conditions, and other details. Also, trading foreign exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is for educational and informational purposes only, and by continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. Alright, let's start with the dollar yen, still in the triangle. In fact, there was an intraday attempt through right here on Thursday, but it faced actually support and ended up as the open and close equal to each other. So that is not a full breakout here on the daily chart. So still in that triangle, basically between these two orange lines, the moving averages are lying flat. So no real trend here on the dollar yen, and still waiting for the breakout. I think that the bearish breakout looks a bit more appealing because we are in a bigger correction, as you can hear. So if price does break the support, I think that could be an interesting trade to retest roughly this bottom on an intraday level. If it does break to the upside, I'm still expecting resistance at this fib at the 61.8 and the 7.6 fibs. Those could still be turning spots for more correction to the downside. If it breaks the bottom, by the way, then price could start correcting a bigger part of this up, and perhaps it could fall down to 107, where we have a long-term moving average, a minus 1,000 target, or two targets of the Fibonacci levels, and we could be retesting the support levels of this uptrend that we've had, of course, in the years before that. But considering the correction that I'm seeing here, I wouldn't be surprised to see a continuation of this consolidation on the dollar yen on the weekly chart. Before I dive into the euro dollar and other pairs, be aware of these webinars: weekly FX recap on Monday with Nennet. Nennet also shares his opinion on over leveraging and leverage and position size. Tuesday, Wednesday, I take a look at Camarilla and intraday strategy on Wednesday. Thursday, together, Nennet and I will look at step-by-step entries, how to handle and tackle entries in the Forex market. That's our focus on Thursday in the Learning Lab. All right, your dollar daily chart. Of course, Thursday we had the interest rate decision and it stayed flat, it stayed the same, and that gave cause for a bullish continuation on the euro dollar and dollar weakness in general. But Friday, look at that, a pretty strong reversal. In fact, engulfing twin, Friday was actually a bigger bearish day than Thursday was a bullish day. So does that signal that the euro dollar is back into a downtrend? Because ultimately we had a pretty strong fall here from end of August to beginning of September, and this side has been pretty corrective and stopped at the 61.8 fib. Certainly possible, considering Friday's bearish momentum here on the euro dollar, or dollar bullish momentum, in fact. So what I'm looking for, a break of this support trend line, could see a breakout to the downside. That breakout, I think, will bump into support. First of all, we have a bigger support trend line coming in. That's point one. Point two, moving averages are flat each other. Typically, when price moves away from those moving averages, when they are flat and on top, price will hook back to them before maybe continuing. At that point, even if this trend line breaks, I wouldn't be surprised to see a hook back to those moving averages, so something like that. After which it could still be resistance, but we're talking quite far in the future already. So something like this, perhaps the break of the trend line down to the minus 272 target, then I would expect to bounce. Not only because of the trend line, but there are also bottoms here, historical levels that have held the euro dollar and kept it going sideways. So from that point of view, a bearish break followed by a bounce back up seems pretty likely when it does break. Will it break? I don't know. Considering the bearish momentum here on the daily, you can see this bearish momentum right here. Furthermore, there have been 5 waves completed on a lower time frame here. 1, 2, 3, 4, 5. So from that point of view, even just a simple ABC from an Elliott wave point of view would already deliver that break. So yes, from that point of view, it could be very likely. I could say, I would put a fib on this, swing high, swing low, and even if price was back up to the 50, the 61.8 fib, those would be potential shorts for that breakout. What could happen too is a small break and then a retracement up to those fibs. So that's something I'm cautious of. I would rather have price actually move up to the 50 and or the 61 or the 78.6 fib before breaking. If it breaks now, before making that retracement, a smaller break, price is vulnerable to making a smaller break and then making the retracement and then falling for the bigger move down to perhaps 109. So that's something I'm cautious of. But ultimately, this bearish momentum plus the daily engulfing twins leads me to believe that the trendline break, there is a decent chance of that happening. If the trendline break happens after the retracement, it looks a bit better than before that. Well, if it doesn't break the trend line, obviously it could start continuing like this, and if it takes too long for the break to happen and it starts pushing through maybe a trend line like that, if we get a lower high here and price starts to break above that trend line, then of course, well, the bearish scenario is out of the window. That would be my invalidation kind of moment, and perhaps price will break back up and move up to the 78.6 fib right here where I have the blue circle instead of the 61.8 fib where I have the red circle. Alright, so that's something to keep an eye on as well, but I would expect here a bigger correction to the downside due to Friday's price action. The pound dollar daily chart looking quite similar. Also a rejection at the 78.6 fib, a bullish candle on Thursday, bearish candle on Friday, but Friday did not engulf Thursday. It did have a wick above it, looking like a bit of perhaps a pin bar or at least a rejection bar, moving flat too. So it's in a situation where price has made a dash to the downside and now hooked back to those moving averages, and it's basically back to neutral. If you look at this whole zone, it's quite a big consolidation zone. So from that point of view, it is kind of in the middle of nowhere, and maybe not as appealing to trade. But if it does break through this support trend line, it could pull away and make that dash to the minus 272 target, maybe the minus 61.8 target. If it does move up, there's that chance of rejection at the 88.6 fib and this trend line right here. So would rather perhaps wait, not look that interesting, perhaps this trend line or maybe this trend line before I see some trades. Obviously on the lower time frame there could be still something to trade. I mean, from that point of view, this also looks like momentum, this looks like correction, and there could be that ABC as well if we dive into the 1 hour chart. That could happen, that pattern like under your dollar could happen as well. Moving on to the AUDUSD, got two big wick candle, and that was a pretty sturdy upside, but ultimately the trend looking very bearish. So we're coming to again that perhaps like here, right here, we could be in for a bit of a correction before we continue down. But just like here, we had one more push up actually to go back to the long-term moving average. So from that point of view, divergence bottoms. All right, so could we have a bit bigger correction up to that long-term moving average? Yes. Considering the divergence, it is something that I would definitely seriously consider. So from that point of view, there could be maybe the potential for an inverse head and shoulders at the 61.8 fib. And there could be the bouncing spot up to the minus 61.8 target and the long-term moving average. So something like this, downside and then up to that target, and then perhaps again down because we're at resistance. Looks like a path of least resistance that I think has a decent chance of unfolding. Now, nothing is 100% obviously, but considering the daily wicks that we see on the AUDUSD daily chart, a bit of a pullback does not seem like a far-fetched idea. Also considering the downtrend, and then a potential bounce at the 61.8, and that of course is risky because let's face it, this isn't a downtrend, so price does not have to make that inverse head and shoulders. But if it does and breaks this neckline right here, then there is that potential for breakout bigger retracement slash reversal breakout to the upside up to that minus 61.8 target. So in any case, AUDUSD seems in a bit of a difficult, maybe perhaps risky situation just because of that daily divergence. Alright, that wraps up my view on the markets. Make sure to take a look at Admiral Markets website and social media, and you'll see that actually Admiral Markets won the MT4 UK award of best broker. So great stuff, and thank you for your vote on Admiral Markets. You can find out more information through social media about Admiral Markets or the website. Thanks again, and wish you good trading. Cheers.